everyone. This is Bill Ross with another video chat. And part of this chat, especially at the end, I'm going to be announcing a new ebook called Money Master. But before we do that, and you can see the link here at the bottom, if you're interested in the book, you can also go to our website, and under ebooks, you'll find listed Money Master. Hey, here we see an exchange traded fund. It's the double short the yen, the YCS. This is a weekly chart, double short the yen. And I love it when someone else does my work for me. I used to have to update these by hand every week, but now the computer does the work. So let's look at these charts. As we look at the chart of the exchange traded fund called YCS, double short the yen, what that means is that if the yen drops 1%, YCS is designed to rise 2%. In other words, it's a leveraged fund. To get the leveraging, the fund operators use both cash and futures. YCS has risen as investors look toward the falling yen. The new Japanese government has openly stated it is going to print money to force the yen down in order to help Japanese exports and to inflate their economy, which has been in a 20-year deflation. Next, let's look at a chart of the Nikkei 225 stock index, which has been rising sharply ever since people anticipated that the Nikkei will rise, and the yen is deliberately being pushed down by the Japanese government. Shorting the yen and buying Japanese stocks has quickly become one of the most popular trades in the market, and that's a bad sign. When everybody thinks something will happen, it usually doesn't. While I still believe shorting the yen and buying Japanese stocks is a good idea for the long term, in the short term, it's probably not. This trade is now too crowded. There's too many people in it. It's too popular. And when it gets like that, usually exactly what they don't expect is what's going to happen. I think it's now time for a correction. It's very likely we'll see a yen rally, which means YCS will drop, and a drop on Japanese stocks in the short term. So let's take a look at the next chart where both markets are shown together. And a lot of times, as you'll see, I like to use line charts. And this is a line chart that I picked up from somewhere. I don't know what the source of this was, but I got it from somewhere on the internet. At the top, we have the Nikkei index, which tracks the performance of Japanese stocks. At the center, we have YCS, or the big chart here, the one taking up most of the room, is YCS, which is the double leveraged exchange traded fund that tracks the inverse performance of the yen. Remember, YCS is structured so that when the yen falls 1%, this ETF rises 2%. So when we see it rising here, it means the yen is falling. As we look at YCS, let's look at that first. It's kind of a stretch to see a head and shoulders here, but it's there. And has just completed a very bullish pattern, which is the head and shoulders bottom. This indicates that we'll see an uptrend in the long term. In other words, the yen is likely to continue to fall, which will push the Nikkei higher and also YCS higher. In many head and shoulders patterns, the price tends to retrace back to the so-called neckline, which you see here. Here's the neckline. Move to my place. So if YCS drops to that level, it would be a great buying opportunity. And here you see it beginning possibly to drop right here. At the top, we see the Nikkei 225, and it's likely to drop as well. That happens because a strong yen is bad for Japanese exporters. At the top, we see that the Nikkei is also approaching resistance. And resistance here, it goes all the way back to May on the weekly chart. And so it's hitting resistance. A resistance area is simply an area where traders have in the past shorted the asset. So we're likely to see some selling pressure in the Nikkei. As I see it, we have the perfect setup for a correction. Here's what I think will happen. YCS will drop down to the 46 area, maybe 46, 47, 48, somewhere in here. And that's going to force the Nikkei lower. It'll drop down to about 10,000 over here. At those levels, buying Japanese stocks and going long YCS will make perfect sense. In my new ebook, Money Master, I show you a great way to make a play on situations such as this. In fact, you can use more than one of the techniques in the book to make a trade in YCS, which can make you a lot of money this year. You'll be able to play it both short and long, which is what I'm doing with the money I trade. Okay, until next time, wish you all the best all the time. And remind you that this Saturday, also, I'm at Genesis Trade Navigator giving a webinar. You can still get that for free. It's a place on our website to sign up. And that's this Saturday at, I think it's 10 o'clock U.S. Central Time. Okay, until then, until next time, bye-bye.